How's it going, everyone? Welcome back to another Sui update. And since the last one, which was maybe a week ago, apologies for not getting many more out. Just have been running my own businesses and whatnot and trying to make as many videos as I can with my spare time. Remembering we're in crypto to have control of our time, so I'm not trying to be slaving away constantly, but I try my best. Anyways, the 200 EMA here was lost, and it's a very important day today as we've just had the monthly close. But over the last week, the 200 EMA was lost, and this was totally negative because I was starting to see some similarities with past corrections, suggesting that this accumulation over here, although it's holding macro support, the 200 EMA, which takes an average of the last 200 days. So that just shows you how important it is for price action to maintain above, for this to be the bottom, because it's an average of the last 200 days. And of course, price action occurring above means that the market is bullish for the last months on end. And so if we see it lost, then maybe potentially for months on end, we could be caught in the opposite trend. And I don't want that to happen, but I have to warn you that nothing is all totally bullish. And this is something that I've been suggesting ever since we got this capitulation wick at the very beginning of the last month, February, because we're now beginning of March. And so that's why we also need to take a look at the monthly close very soon. But even before we get onto the monthly time frame, I can see this super important level of support unfortunately was lost, and on every attempt to come back into it, as I was warning, these pumps are going to keep lower high because that's the trend. Look at the high here, lower, 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 lower. So it just keeps going lower and lower. We need to see character and structure changes, but let's say it broke through here and made a higher high over this one. It's still not good enough as it's still beneath all of this. So we're worse positioned than before, needing to put even more pressure on it now, but it was better positioned before. You can see this accumulation area, it actually ended up just being distribution to continue lower. I'm going to show you so many similarities with the past, so make sure you stay tuned until the very end. And if you could support the channel, you don't understand how far it really goes. Even just a like or a one-liner, whether it's an emoji or a thanks, it really does grow the channel. And over here, with this build up of new bearish crosses, as you can see over the past week, and we're about to get one between the 55 and the 100. That's a very bearish signal. So over the coming week, price needs to move back up into this area, the final set of moving averages, to invalidate the bearish cross. When these cross over, it's a signal that even if we get the move up, it should eventually continue lower. That is the risk. And we've actually seen this already occur with this initial move up off of support from $2.39 to $3.90. Guys, this is a mega bounce. A very, very impressive bounce. But we all got scammed. 62%. To do what after that 62% move? To go down 35%? To be only up 6% off the bottom? And currently it's only 17 off the bottom. That temporary euphoria really tricked many people. And this is actually what I was warning of with this very candle, suggesting that it's going to do a wick fill, and it had every opportunity to not do that, to not wick fill. When you see the 200 EMA maintaining, remember that maintaining the 200 EMA is meant to give you a new all-time high, in fact, guys. So when we saw this bullish pattern forming and everyone starting to get excited again, because I was talking about that potential bullish scenario, I was constantly warning everyone. I'm seeing many similarities with past corrections with these four tops, which we'll get into very soon. But you can also see we have these three red resistance boxes. And if you've been following my updates for the last month, you'd know that I've been constantly saying $3.50, $4, and $5 all must be reclaimed. Only then I will be the most bullish out of all of you. Why is that? Why am I not super bullish even on the recovery of all the moving averages? Why am I not bullish? Because even though we see to the left a very similar setup of a double bottom on key support, when the moving averages were recovered, what did it do? It only went higher and higher and higher. And each time you came into them and held and recovered them, higher and higher and higher. So why would I not be the most bullish out of all of you when we see the moving averages reclaim? Because that should be a signal to us that new all-time highs will come. Now, the reason why I'm not as bullish as everyone at this point rather than breaking here. And I'm going to show you now on the best example possible, which is Bitcoin. And very soon, straight after that Bitcoin analysis, to compare and contrast this to some past examples and experiences, I will talk about these 4 tops and how if we fail to recover key levels, there could be a lot lower. So I will get into that very briefly. Please do stay tuned. Now I'm going to show you these examples of why I would not flip bullish on the break of this level. And when I mean that, I mean long-term bullish. You could break this level, get up into the next one, and still continue to new lows. So I'm going to show you these examples now on the previous Bitcoin charts. When we were going through that 8-month long correction last year, we were getting tricked left, right, and center. And that really helped me adjust my strategy using the Fibonacci's. And I'm going to go through and show you some little secrets here. If you want to learn how to do this on your own, I do recommend one-on-one mentorship is obviously one of the greatest options as I sit with you and do it until you get it. You've got the ebook. You can do that in your own time. It's all there in written format. You will understand it's like 30, 40 pages long. And also got the group Discord community, which is probably the cheapest option. I'm in there morning, day and night. And I also do provide group live streams to teach you. But you can see 786, 886. If you're not aware, this is what needs to break for the reversal wave. So a pump up into that is just not good enough. A move from 61k to 72k, an 11k move was not good enough to sustain the trend. And what happened? New lows eventually formed beyond that point. So getting up as high as that was not good enough. The high must break. And so same thing again, whether I measure this next move down to this level from here or there, we will do both. My point is, once it has bottomed out, look at the ginormous move up and it still went to new lows. Let's double check where it topped out. It topped out at the 886, and we could actually put the fib on this high or this high. Either way, we saw that it topped out in this red box over here, which I'll now draw between this area. Oh, green. Let's turn it to red. So this is the ultimate resistance. I've now shown you a few occasions where you saw a massive market-wide dump and bounce, and the bounce was still not good enough because it doesn't recover those levels, and in the end, new lows. I've just shown you three different occasions when that was the case, and taking it back to SUI now, that can be the case. So all the way bouncing from $2.39 could get as high as, could get as high as $5 from here and still head to new lows. If you don't believe me, I don't know what to do. I literally just showed you proof. So, and you also just saw this. Now let's get into this. So if you've been following my SUI videos for a month, at least you'd know I've spoken about this many times. When we first saw that capitulation, I saw many similarities with this March top. So that 8-month long correction, we're kind of trapped in it right now, guys. And at each day that develops, my point keeps getting proved further, because ultimately, if you do not want to follow this path, then do not lose the 200 EMA. And that's exactly what happened. You could actually argue we had better chances not listening to the last correction this time than last time. Obviously, there was nothing for it to copy last time, but it was better off this time than last. Why? Because the 200 EMA was holding on that capitulation candle. On this capitulation candle, we see the 200 EMA was lost. I knew everyone was getting trapped when we saw this move up, because in the past, bearish crosses had already formed as this capitulation happened, and it was the same thing again. Bearish crosses had already formed. So the move back up is just going to confirm the moving averages as resistance. And look over here, guys, where the 55 and the 100 crossed. We're about to get that once again. The only way price does not form this cross is if we get a miracle next week, as I said earlier in the video. Next week, it must pump into $3.60, not 300, $3.60, and reclaim it, not just pumping into it, turning it into support. It's very highly unlikely, because when you get into that, it is resistance. So you will reject and continue lower. Then you need to higher low on the 200 EMA once again, and then turn that 360 into support. It's not what it did last time. That's what it would need to do to invalidate further downside. Right now, you can see we're sort of in this movement down back to the lows now. So day by day that passes, it looks like this even more And if that is so, we're still going to lose this low over here and head to new lows and dip down into these targets potentially. Do I want this to happen? Well, if you're not in the project, then that would serve as a great entry point. It's not like this is already a great entry point when it was $5.30 and now $2.80, of course, but there is that risk that we do head lower. Now, someone holding altcoins does not want to see their bags keep dropping, so it's going to be hell for those. Max pain if that is to be the case. Remember that although it's following right now, and it has been doing so day by day, consistently following as each day develops, it can of course at some point invalidate the path. And I've mentioned the way it goes ahead and does so. We need to see this $3.60 recovered, and that is a great first step in the right direction. But please be aware, everyone, please be aware. I've shown you 3 to 4 examples on Bitcoin, the mother of all coins, the most reliable, the most trusted, the one with the most data. And even just in the last year, I've shown you 4 different occasions where it pumped so aggressively all the way to one of the final Fibonacci levels and still made new lower lows. That can happen. So I can't really get super excited anymore. And in fact, I was saying these signals very early on, just simply with how much it dumped. And I'm not even talking about percentage. Of course, that plays hand, but I'm just talking the size. Like, that is a massive dump. When you see such a big dump, it's just nearly impossible to just go straight to new all-time highs. So it will lower high, and then we need to see if it will lower low or higher low, and then from here break out. I will be here to update it as it develops, but I've already told you what path I believe we're on, which is the bearish path. This is my belief, but I've also shown you how does it invalidate it, what it needs to do to invalidate it. And if we start seeing those things, then I'll say, guys, we're actually on the path to try and invalidate it rather than trying to maintain on that bearish path. But right now, I don't see anything to suggest we're trying to stop being on that bearish path. Right now, all I see is confirmation, knuckling down, confirming, all these words, basically just confirming that we are bearish. So no structural or characteristic changes to change my bias. Once I start to see one by one these bearish paths invalid, for example, right now, currently under the 200 EMA, if it can recover that, that's a great first step. That's one thing out the way. This is what we need to do and build. But unfortunately, we can invalidate all these steps one by one, breaking above this level, this level, and this level. But ultimately, even if there's just that one bearish signal, which is price being under $5, it could still head to new lows. So it's very risky. Times up ahead. If you have that conviction, then this might be your greatest DCA moment if you believe that it is the bottom. I'm not here trying to scare anyone or anything. I'm not here trying to claim that I'm some TA wizard or God. I'm just doing very basic support and resistance analysis, but I'm not using only horizontal levels. I'm using support and resistances that are actually being given to me by Fibonacci's, by moving averages, and understanding what they need to do for the market to be bullish or bearish. And currently, they're doing everything possible for the market to continue bearish. That is it from me today. Any changes, I'll be the first to let you know. When that $5 is recovered, I'll be the most bullish out of all of you because I know that all the bearish scenarios are invalid. Until that moment, I will maintain bearish. I'll be saying that any pump is false, that should lower high. I have not been proven wrong yet. I want to be proven wrong. I want to see these characteristic changes, but right now, as of now, I'm not seeing this. So thank you so much for tuning in today, giving me your spare time on your weekend, and hopefully I'll see you again on the channel in the next week over the next SUI updates. Check out all the other videos on the channel. Even if you're not in those cryptos, just watch another video and learn how to do the same analysis as me. And yeah, it just is repetition. If you want to learn how to place the fibs, how to understand the paths by maintaining certain supports or resistances, what path you're on, when certain levels are broken, what's the next situation that it goes into, so you're not ever really getting caught off guard, because obviously it only goes in 2 directions, but you'll know the path and the targets and how to maintain that path, how to deviate from that path and go on to the bearish or to the bullish path, the opposite, and then what would the targets be? You're always going to know the targets in any direction. Use the links down below and I'll see you over there. Cheers.